Good morning, everyone. On behalf of the Brazil, Texas Chamber of Commerce, BRATECC, it's my great pleasure to welcome you today to the webinar Understanding Brazil Tax Reforms, Consumption and Income. My name is Paula Galhardo. I'm a principal at Squire Patton Boggs, and I serve as the board member and legal counsel at BRATECC. It's truly a pleasure to see such strong engagement around a topic that is both timely and high relevant for companies, investors, and professionals operating across Brazil and the United States. For those joining us today for the first time, the Brazil Texas Chamber of Commerce is a nonprofit organization dedicated to strengthen commercial, institutional, and cultural ties between Brazil and Texas. Through events like this one, we aim to foster meaningful dialogue, promote business opportunities, and provide practical insights on key developments impacting our bilateral community. So today, our focus is going to be on discussion on Brazil tax reform, on the most significant structural change in the country economic and regulatory landscape in decades. Understanding both consumption and income tax developments is essential for companies navigating investment decisions, cross-border operation, and long-term strategic planning. I would like to extend our sincere thanks to Mattos Filho for sponsoring and presenting today's webinar. Mattos Filho is recognized among the world's 200 largest law firms by the legal sector's main financial ranking, the Global 200, and is the eighth time Brazil Law Firm of the Year according to Chambers and Partners, a high-performing full-service firm operating across more than 45 areas of law with its offices in São Paulo, Campinas, Rio de Janeiro, and Brasília, as well as international office in New York and regional desk focused on different areas of the globe. It's also my pleasure to introduce Leonardo Homsi, partner at Mattos Filho and a member of the board of directors of BRATECC. Leonardo specializes in tax matter and advises local international companies across a wide range of sectors, including oil and gas, electric power, new energy, technology, and infrastructure. His expertise encompasses both direct and indirect taxation, as well as customer law, international taxation, and foreign investment. Leo, thank you so much for being with us today, and the floor is all yours.
Thank you, Paula. Thank you so much for the introduction. We are truly happy to be here as a board member and being the firm, a member of BRATECC. For us is an honor to contribute and to sponsor this webinar. I'm going to be short here so that we have enough time for this discussion. I mean, we're going to have only 1 hour for the presentation. And today, actually, I'm accompanied by my partner, Thaís Bandeira de Melo Rodrigues. I mean, you mentioned my CV there, and Thaís CV goes way beyond mine. She's really experienced in oil and gas tax-related matters, energy as well, infrastructure projects. And we're going to have also with us Rafael, our senior attorney in our tax group, both of them practicing here out of Rio de Janeiro as well. So with a lot of experience also in oil and gas, energy, and more recently, data center energy related projects as well. So, I mean, so that we have the idea here is, of course, it's not getting too technical. 1 hour would be a too short webinar to go over all the changes that we are experiencing the last couple of years, actually. So we're going to start with Rafael talking about the consumption tax reform, right, where Brazil is replacing the old and the complex, historically complex VAT type taxes that we have charged by states and cities, which will start being replaced in 2027. We have a testing period during this year, but in 2027 is where things will really start. And then Rafael will then shift to Thaís, who will talk about the recent income tax changes that happened late last year. Some of them a bit of surprise, others not. I mean, so I'll just pass the form to them so we can kick this off and have sufficient time at the very end for some questions. I would say, I mean, it's 3:08 in Brazil right now. I don't know, Paula, you're 3 hours behind us, I think, right? So that's 12:08. You're starting your afternoon in Texas. So, I mean, if we can stop at 3:45 Brazil or 12:45, where we can have 15 minutes for a brief Q&A as well. So, Rafael, the floor is now yours. Thank you so much.
Rafael and Thais, before we start, I know that you're going to put the PowerPoint. Just to let our listener to see, we have a Q&A app or a point in the presentation. Please include your questions over there so Thais and Rafael can address during the Q&A part of the webinar. Thank you.
Okay, so I will share my screen and then I will pass to Rafael. Just one moment.
I think it's working. Thank you, Thais. Thank you, Paula. Thank you, Leonardo. Thank you, BRATECC, for the opportunity to be here to talking to US colleagues, focusing on today on Brazilian taxes, Brazil tax reforms. We will start, as Leonardo said, with the consumption tax reform, and then a quick overview regarding Brazil. As many of you may know, the federal constitution of Brazil allows the different levels of public authorities to create their own taxes. So we have the federal government with the income tax and also gross revenue taxes, which are a type of VAT, the PIS/COFINS taxes. We have states with another VAT, which is the ICMS, and other taxes as well. And we have the cities, more than 5,000 cities, municipalities in Brazil, each of them creating its own service tax. And of course, this multiple taxes created a very complex environment throughout the years. So at the heart of our consumption reform, we see the intention of simplifying this complex structure where we have different levels of public authorities with taxing powers. And then I think this first concept is really important. And then when it comes to the, thank you, Thais. I think this is the right slide. When it comes to the consumption tax reform, I think we need to start by having it clear that it creates what we call a dual VAT system. VAT, it's the abbreviation of value-added tax, which is basically a tax where inputs or acquisitions generate credits for the company, while outputs or sales will generate tax liabilities, and then the tax is levied on the delta, on the difference between the acquisitions, the credits, and the sales, the outputs, the liabilities. This is why we call value-added tax. It's because each company will only pay taxes on the value such company has added to the value chain during the value chain. So trying to summarize here the scheme in the left side of the slide, we are basically creating two VATs, two value-added taxes, the IBS and CBS. The CBS will be the federal VAT, while the IBS will be the state-city VAT. These taxes will replace, in the case of the CBS, will replace PIS/COFINS, which is the federal gross revenue tax we have today, while the IBS will replace the ISS, the city service tax, and the ICMS, which is the state VAT. And an important thing here is that differently from the former taxes, these new taxes, they are actual VATs. The others, the current taxes that we have, they are VAT type, but not actual VATs. We will explain this in additional details during the presentation. And in addition to being actual VATs, there is an important principle under the tax reform, that is these two taxes, even though being collected by different authorities, the CBS by the federal authority and the IBS by state municipal authorities, their rules will be the same. So the tax base, the credit mechanism, the tax incentives, both taxes will follow the exact same rules. So this is really aims really at simplifying the consumption tax system Brazil currently has. And then regarding this introduction, just to finalize the description of the taxes that will replace the existing taxes, we currently also have, in addition to PIS/COFINS, ISS, and ISMS, we also have IPI, which is a federal tax levied on manufactured products. This tax, in a way, will be replaced by what we call selective tax or sin tax. Even though these two taxes are quite different, we will explain what is the selective tax, but in a way, selective tax is being created to replace the current collection of IPI. And the only final point here, the IPI, because ISS, ISMS, PIS/COFINS, these taxes will all be extinguished at some point in time, while the IPI will not be extinguished. Its rate will be reduced to 0, except for specific situations where we have products manufacturing in Manaus Free Trade Zone, which is a specific area of Brazil, and then trying to protect Manaus Free Trade Zone, there will be an IPI, a residual IPI levying in such situations. So this is, I mean, the overall concept of which taxes are being will replace the existing taxes, and then I think we should tackle the elements or the important characteristics of these new VATs, the two VATs, the CBS and IBS. And then starting, I think the first point is these new taxes, differently from the current taxes, they will have a broad tax base, meaning that they will be levied in any transaction with tangible or intangible goods or services. This is really, really important because today we have the ISMS, for instance, for tangible goods and the ISS for services, and then certain transactions such as rentals, charter arrangements, and others, they fall outside the scope of the VATs. Neither the ISMS or the ISS currently levy in these transactions. And then when it comes to the reform, we will have this rental type, charter type transactions also being subject to the new taxes. So for this specific type of legal transactions, we expect, of course, an increase in the tax burden because, I mean, currently they are not subject to VATs or only subject to the PIS/COFINS, which is a different tax, it's on revenues. But starting next year, they will be subject to the new VATs. Another important point is related to the tax rates. Currently, each state, municipality, or even the federal government can establish different rates for type of product or for type of service. So the SMS for power might be 20%, but for oil, maybe 18%, and so on and so forth. And then under the new tax reform, under the new taxes, there will be one single rate, one standard rate that will apply for any type of transaction with goods or services. So in a way, while this simplifies the system, because we will not have multiple rates, only a base rate for any type of good or service being negotiated in that specific location. This also removes, in a way, power from states and municipalities, which will have less power to, create their own tax policies, trying to bring business there to their locations. This power of the states and municipalities will be decreased.
Rafael, just one comment regarding the tax rate is that first the tax rate would be the same within the same municipality and state. So you can have different tax rates if they are the base. Actually the consumer is located in different states or municipalities. And the other thing that I'm sure you will address later is that we do not know yet which should be the tax rates for any state or municipality or the federal as well. This is still planned to be published.
Yeah, thank you, Thais. I think this is important. We will have what we call reference rate, which will be defined by the Senate. We are still waiting. The reference rate, the overall reference rate, is expected to be around 26 or 28%. But then, as Thais described, each entity will have the power to either follow the reference rate or apply a different rate. And then, just to be clear, each state or municipality will not have the power to create different rates for types of products or services, but each state or municipality will have the power to set its own rate. So, like Rio de Janeiro can establish that the IBS rate will be, for instance, 17%, and then São Paulo may establish that it will be 18%. So the rates per state may change, but within the state, the same rate should apply for any types of products or services. This is the main concept here.
And the difference, just one comment, I think it's important. The difference here now is that the state and municipality, they do not have incentives to establish lower rates now, because the payment will happen in the consumption, in the place of the consumption. So it's very hard to say that people will change their where they live to pay less taxes because the consumption tax is lower in a different state or municipality.
Yeah. This is in a way, this is important, but and this in a way is linked to another element or characteristic of the new system, which is the fact that states and municipalities and even the federal government will not have the power to grant tax incentives. So the only tax incentives will be those already provided in the Brazilian Constitution. They are already there, already in the law. The public authorities will not be allowed to create new tax incentives. And this is important because under the current rules or under the former rules, we saw what we called tax war, which is basically states granting tax incentives to bring business to their locations, to their states, because of this concept Thais just described, that is the former taxes, they are due to the location where the supplier is domiciled. So if the supplier is in São Paulo, as a rule, the taxes will be paid to São Paulo. So it makes sense for São Paulo to grant tax incentives, while under the new regime, the taxes will be due to the location where the consumption occurs, so where the client is. So it will be irrelevant for determining the amount of tax, whether the supplier is in Bahia or São Paulo. because if your client is in Rio de Janeiro, the tax rates will be those applicable in Rio, not in São Paulo. And this is really tied to a concept that we have under the reform, which is the tax, what they call tax neutrality. So the intent behind all these changes is that the taxation or these taxes, the consumption taxes, do not play a relevant role in determining where a company will operate. The company should choose where it will operate based on, logistics, the size of their target market, and so on and so forth, and not based on taxation. The taxation should be very similar regardless of where the company is operating within Brazil. So I think that with these comments, we addressed here the tax rates, the not subject to tax incentives, and also the aspect that the new taxes will be due to the location of the consumption. And then going a bit ahead, we have another important aspect here is that currently the current taxes, they are calculated, they have a calculation mechanic that we call here in Brazil cálculo por dentro, which means that the taxes are levied not only on the transaction price or on the revenue, but also on their own value. So the PIS/COFINS is levied on the PIS/COFINS, the ICMS is levied on the PIS/COFINS and the ICMS as well. They assess the same, what we call gross up. And this creates what we call cascading taxation, and in a way this decreases the transparency, because sometimes, and it's quite common that a person cannot know how much taxes are being paid in a transaction. So with this new mechanism where the new taxes will be calculated, what we call in Brazil por fora, without levying in its own prices, without the gross up mechanism, we will create a more simple system, a more transparent system. So I think this is also an important aspect for us to keep in mind. This is clear in the law. What is not clear is, as we will explain in the next slide, we will have a transition period where the new taxes will coexist with the current taxes, and then there is a debate, a discussion on whether the new taxes should be included or not on the tax basis of the existing taxes, whether IBS and CBS should or not be included in the ICMS or ISS tax basis. This is a new discussion that we believe we are going to see a lot of debate regarding this in the next years.
Which shows that this is a mess, right? Because the idea was to simplify that, and then we have a lot of discussions of which tax would be left on the new taxes and vice versa.
And then just to finalize, I think regarding the overall, I think we can move Thais to the next slide. Regarding this overall concepts under the new taxes, I said that the new taxes will have a broad tax base, meaning that they will be levied in any types of transactions with goods or services, intangibles, tangibles, and the other side of the same coin is that the credit system of these new taxes will also be broader than the existing crediting mechanism. So if we look to the current PIS/COFINS or SMS, the credit, the transactions that are entitled to credit, they are expressly provided in the legislation. The idea is that you can only avail yourself with credits in those specific circumstances provided in the law, while the concept here for the new taxes will be the opposite. The credit will be the general rule. There is only one exception, which is for what they call personal use or consumption goods, which is basically, things or goods for the consumption of individuals. These would not be creditable, but I mean, under the normal circumstances, normal of operations of a company, any types of inputs will be creditable. The only rule being that the credits will be conditioned to the taxes, the IBS or CBS being paid effectively by the supplier. So the client, a company that purchases an input from another company, will only be able to credit if the supplier has paid correctly the IBS and CBS. And then the intent behind this, the intent behind conditioning the credit to the actual payment of the taxes is to create an environment where the companies themselves act in a way that they are inspecting their suppliers or inspecting their clients. Because I mean, if a company purchases an input from another company, of course the purchaser will want the input to reduce its tax payable on its outputs, and then of course in a way such a company will inspect whether the supplier is properly paying or not the IBS, CBS taxes. And then for this to happen, the tax reform create new concepts or new systems, which what we call the payment by the purchaser, which allows a purchaser of a supplier, a company, to guarantee that it will be able to avail itself with the credits. It will be allowed to pay, so to segregate the tax invoice from the client and pay the taxes directly to the tax authorities and remit to the client, to the supplier, only the net proceeds. So the tax reform is creating this possibility of the taxes being paid by the purchaser to guarantee the credit, and also what we called a split payment, that is a obligation that will sit under financial institutions, the payment service providers like banks or credit cards and so on and so forth, that these entities, these payment service providers, they will be obliged to, when receiving a payment from a client, before passing on the amounts to the supplier, the bank or the financial institution will be responsible for segregating the net proceeds to be directed to the client, to the supplier, and the taxes to be directed to the tax authority. So this way, the legislation ensures that the new taxes will be paid, and then of course that the client, the purchaser of the products, will be entitled to the credits. Thais, I think we can move to the next slide. I think now it's basically an overview of the transition. This one will be very fast. Leonardo addressed this in a very high level manner in the beginning of the presentation, but I will say it again. So this year, the reform starts this year because we have the so-called test rates. The actual tax burden will not change this year. The rates this year is only for testing, and then the new taxes will reduce the current taxes. So it's just to test the new systems and so on and so forth. And then next year we have, in fact, the tax reform being effectively applicable. Next year, the PIS/COFINS, the federal gross revenue tax, will be extinguished, and the CBS, which is the federal VAT, will replace the PIS/COFINS, and then the selective tax, it will also be created as of next year, and the IPI, which is the current tax on manufactured products, its rate will be reduced to 0. And then 2027, 2028, it will be the same. Then 2029, the state and city taxes, the ICMS and ISS, will start being decreased gradually, as the IBS, which is the new VAT for states and municipalities, will be increased gradually. So the concept here will be an increase or decrease 10% per year starting 2029, and then in 2032 we will have the existing taxes, ISMS and ISS, applying at their 60% current rates, while the IBS will be applying at 40% of its applicable rate, and then in 2033 the ISMS will be fully extinguished, and the IBS will be the only tax applicable at state and city levels. So, I mean, this is the overall concept of the transition period when the new taxes come and the current taxes are gradually phased out. And then I think I think we can go ahead to the next slide. This one, I think this is more technical, so I will be very fast here. I will skip the concept of export, because I mean, exports are generally tax exempt in Brazil. The current taxes, we have a specific concept of export for each of these taxes. So we have a concept for PIS/COFINS purposes, another concept for ISS purposes, and then with the tax reform, we will create a new concept of export that will be applicable to both CBS and IBS. And this concept will be really tied to the place where the consumption occurs. So the consumption of the good or the service should take place outside Brazil. Another relevant aspect of these new taxes, when comparing to the existing taxes, is that the existing taxes, they are only levied on transactions effectively occurred. So I mean, an effective service provision, the ISS only applies to an actual service provision. The ISMS only applies to an actual supply of goods, while the concept of supply under the new taxes, it is broader and encompass also the act of making available a tangible or intangible property or service. And in practical terms, this will bring significant implications to take or pay or ship or pay arrangements where we don't have the current VATs being levied, because I mean, ship or pay or take or pay, they are not actual supplies, they are potential supplies. So these taxes doesn't apply, but don't apply, but the new taxes will apply to this type of transactions. And the final point is that the current taxes, like I described, they are only payable upon an actual sale, the actual transfer of goods, the actual service provision, while so prepayments are not taxable as a rule, and under the tax reform, prepayments will be sufficient to trigger tax collection. So this is also an important rule, I think, for companies to keep in mind. I think we can move ahead, and then this is the final slide regarding the consumption tax reform. I mean, just an overview about the selective tax, which will be a tax levied on a specific products or services that are considered to be harmful to health or environment. So vehicles, vessels, aircraft, oil, minerals in general, natural gas. I mean, specifically the oil and gas industry has been discussing a lot this new tax, because the constitution says that these taxes will not be levied on exports, but that an exception was created for this new tax to be levied on the extraction of mineral goods such as oil and natural gas. So the oil and gas industry has been discussing this a lot. I mean, this is really specific. I think it's important just for you to keep in mind that this will be a new tax that will apply for these specific products and services. It's also a federal tax, so only the federal government will dictate the rules here, and the rates are still yet to be defined. We will have different rates, either nominal rates for each transaction, or even percentage rates to be applied depending on the type of good or service. I think that's, in a nutshell, that's it about the tax consumption reform.
So first of all, thank you everyone to be here to discuss the Brazilian tax reforms. We discussed as Rafael mentioned, that one of the goals of the tax reform, the consumption tax reform, was to reduce tax incentives. So that's why it was something that was really addressed in the amendment to the Constitution and in the complementary law that regulates these new taxes. And following this principle, the federal government recently published a law, the supplementary law 224, at the end of 2025, really at the end, December 26, that aims to reduce certain tax incentives in 10%. So the reduction is applicable not only to income taxes, but also to PIS and COFINS, which will, of course, only impact the payments of 2026, because PIS and COFINS will be extinguished this year. It also impacts the reduction, the import tax, and the IPI. The IPI, as Rafael mentioned, will be reduced to zero in 2027. It will only be levied on certain items from the Manaus free trade zone. And also social security contributions will be subject to this 10% reduction. There is a lot of discussions going on because of the law. The law is very new. You already have some judicial decisions regarding this application. But at the end of this month, last month actually, the Brazilian IRS published a Q&A addressing some of the concerns of the taxpayers. For example, they confirmed that only the taxes expressly mentioned in the law will be subject to reductions. So it would not apply, for example, for the withholding income tax or to the IOF, which is a tax on financial transaction. It also confirms that the reductions will apply for the tax regimes that are expressly identified in the tax expenditure report of 2026, which is an attachment of the law that authorized the budget for the federal government each year, and also to certain regimes that were not included in the tax expenditure report, but they were expressly mentioned in the law. For example, the presumed profit regime, which is one way of calculating corporate income tax in Brazil. In Brazil, you have 3 different calculation methodologies for the corporate income tax. The presumed profit regime, it was always viewed as a method of calculation and a simplification of the calculation as opposed to the taxable income, which you have to have all the books prepared and another requirements. The presumed profit regime only applies for companies that have a maximum gross revenue of 78 million reais in the previous calendar year. So it's very it's not applicable to all companies, to just certain companies, but it reduced the tax rate significantly, because you only you apply presumed profit rates to the gross revenue of the company. So this is being under discussion. A lot of companies already already get injunctions in the courts say that this reduction should not apply to the presumed profit regime because this is not a benefit, but only a method of calculation. But this is, of course, to be discussed for some time. Another regime that impacts a lot the oil and gas industry and that it's not included in this reduction, which is a relief for the industry, is the Repetro. It says specifically in the Brazilian IRS Q&A that Repetro will not be affected because it's neither included in the budget law nor in the supplementary law. So this is a good thing. The methodology of reduction was listed in the law, and it's a little bit complicated, but the idea is to either apply the 10% of the standard rate if you have a benefit of exemption or a zero tax rate, or you reduce the benefit. If you already have a reduced rate, you have to apply the reduction of the benefit plus a 10% of the standard rate. If you have a reduction of tax base, you have to apply a reduction of the tax base and so forth and so on. And in relation to tax regimes which the tax base is presumed, which is the case of the presumed profit methodology, they will increase 10% in the presumptions percentage. So this is something that at the beginning it was very discussed, but now it is settled that they will increase these presumed profit rates in 10%. Regimes that were actually affected by this reduction are the Sudan-Sudani, which are tax incentives for companies that are located in Sudan and Sudani regions in the north and northeast of Brazil. The idea of these incentives is to stimulate the economic and social development of these areas because they are for a lot of years the poorest areas of Brazil. But what the law say is that the reduction will affect any project that was not approved and is already under execution by December of last year. So for new projects, the reduction of 10% will apply. Today, or we still have, because for each tax, the new law will enter into force in different times because of the grandfather period. For example, we now have a full exemption in the taxes levied on the importation of LNG, but after April of this year, you have to pay PIS and COFINS in this importation. Also, for vessels and aircrafts that have zero rates or reduction rates, this will apply because these specific regimes, they are included in the budget law. Also, REIT, which is very commonly used by companies that are under the infrastructure industry because it exempts the payment of PIS and COFINS when you acquire or import locally or import goods and machines for your fixed assets, and you have an exemption of PIS and COFINS. But now in 2026, you have to pay 10% of the normal rate. What is funny here is that after 2007, when you have the CBS as the tax that will enter into force, the CBS granted full exemption of the tax, the complementary law granted a full exemption of the PIS and COFINS tax on the same regime, on the same rate regime. So it will have a reduction of the tax incentive in 1 year, and the next year you will have the full exemption again. And the presumed profit methodology, as we mentioned, the 10% will apply for companies that have gross revenues exceeding 5 million in the calendar year. Another thing that this law that is not related to the reduction of tax benefits, but it was included in the same law, it was the increase of the withholding income tax rate in relation to interest on equity distributions. This increase of this tax rate has been discussed for many years. A lot of laws tried to do that, but it was never approved. But now they were able to approve this increase. So now when you distribute interest on equity, you have to pay 17.5% at source. But for the countries that have double taxation treaties signed with Brazil, it's possible to continue to use the 15% or a lower tax rate, depending on the treaty, because of how Brazilian IRS sees the interest on that equity as an interest, so it would be subject to the chapter related to interest. Brazil and USA do not have any double tax treaty signed, so for payments from Brazil to United States, the 17.5% rate will apply. You again, Rafa.
Yeah, thank you, Thais. I think this was the key topic of last year, second semester, which is the introduction of dividend withholding tax by Brazil at a 10% rate. As you may know, Brazil has been applying a dividend exemption, tax exemption, since 1996. So basically for 30 years, and now we have once again a dividend withholding tax. This new tax applies for distributions to both non-resident shareholders, either companies or individuals, and to distributions to resident shareholders only in case these resident shareholders are individuals. And then there are specific rules for these individuals, because I mean the tax won't apply if the distribution exceeds 50,000 Brazilian reais per month. I mean, there are different rules when it comes to non-residents, which I think it's the key topic here. Any distributions of profits as of January 2026, a 10% withholding income tax will apply. There was, and I mean, there are several discussions surrounding whether this new tax can be applied to profits accrued up to December 2025. There is a transition rule in the law saying that the new tax will not apply as long as certain requirements or conditions are observed. And then the discussion is whether these conditions, they are legal or not, because I mean, the former rule already established that these dividends would be exempted. And these requirements or conditions are basically, they are basically related to the approval of the dividend distribution, so the Corporate Act. And what the law says is that the Corporate Act should have been done up to December 31st, 2025, so last year. And then there is an additional requirement that relates to the actual payment of the dividends, which in the wording of the law establishes that the payment, the dividends, should be legally enforceable, and that the payment should take place as per the terms originally approved in the Corporate Act. And then there was a lot of debate regarding this, whether this would mean that the company should pay within 2025 because a specific provision of Brazilian corporations law, or whether the payment could take place in following years, because I mean the tax legislation itself has no restriction regarding when the payments should take place. And then the Brazilian Tax Authority issued a statement, a Q&A, a question and answers document, basically stating that the payment, the requirement related to the payment should be interpreted as allowing companies to pay up to 2028. So according to the law, to the written provisions of the law, if companies has approved the dividends up to December 2025 and pay the dividends up to December 2028, the dividends relating to periods ended up to 2025 should be exempted. Currently, there is a discussion trying to postpone the deadline for the declaration, the approval of the dividends from December 31st, 2025 to April. There is a bill, but we are monitoring, and this year we have no news, no relevant news about this bill yet. So we don't know if the bill will or not be approved up to April, allowing companies to approve this year the distributions of profits relating to previous years and still applying the exemption. So there is a bill, and there are also some legal actions in the Supreme Court. The Supreme Court, in fact, extended the deadline up to January, but I mean, the decision is not final. So companies have been, in a way, in our experience, being concerned about applying the decision of the Supreme Court, because this decision may or may not be confirmed by the full bench. So I think we can move. This is just saying about all the discussion regarding the profits of up to 2025, and then just to explain, as I mentioned, the new tax will apply at a 10% rate. But there will be an integration system with the intent being that the aggregate rate, considering the effective corporate income tax rate of the company plus the 10% withholding income tax on the dividends, the aggregate rate of these two taxes cannot exceed the 34%, which is the regular CIT rate in Brazil. So if the aggregate rate exceeds 34, for instance, if the aggregate rate is 40%, then the non-Brazilian shareholder, the non-resident shareholder, will be entitled to a credit equivalent to the 6% difference. The rules regarding the credit, the calculation of this credit, and how the credit will be requested by the non-resident shareholder and other rules, they are still pending regulation. I think what is relevant to keep in mind here is that we have because I mean the calculation, the law says that the calculation will look to the effective tax rate of the corporate income tax of the company paying the dividends. We have a definition of effective tax rate for accounting purposes, but the law it establishes a different calculation or a different definition for tax purposes. It uses the expression tax due, not tax expense. So this way, in principle, because of this, the effective tax rate calculation will consider only the tax payable, the temporary tax difference, so the deferred tax assets or liabilities will not be considered, and this may be significant to industries such as the oil and gas industry, where we have material temporary differences, because this difference again will not be included in the calculation. And just to finalize here regarding the dividend taxation, we also have a rule, also pending regulation, that will allow the calculation of the effective tax rate to be done on a consolidated basis. This will be very, very important for holding companies or for companies operating in Brazil through holding companies, because I mean, when it comes to holding companies, considering that equity pickup method is not taxed in Brazil, if we look only to the the ultimate holding in Brazil, it would have a high profit because of the equity pickup method, but no tax due because equity pickup is exempt. So the threshold, the 34% threshold, would never be exceeded, and then the tax credit would never be applicable. So for this specific situation, because of this specific situation, the law allows the companies to adopt a consolidated calculation, looking to the consolidated financial statements of the holding entity, but this is still pending regulations. And of course, there are already several questions about these regulations, because I mean, when the law says consolidated, what will happen, for instance, with non-consolidated entities, because the income arising from the investment in those entities will be captured by the holding entity, but the taxes, considering that we are talking about a non-consolidated investment, the taxes paid by or due by the non-consolidated investment will not be considered in the calculation if we look only to the consolidated financial statement. So I mean, there are a lot of questions still regarding these calculations for the credit. I think this one is just to say that when the law was published, there was a question regarding whether the 10% would apply. The 10% withholding income tax on dividends would also apply for payments to foreign tax jurisdictions, favorable tax jurisdictions, or whether a 25% rate would apply. But the Brazilian tax authorities stated expressly that the 10% rate applies. I think we have I mean, I think that's all, but we have a question on the Q&A section.
Yes, regarding the approval and distribution of interest on net equity of profits of 2025, but approved in 2026. In my opinion, you have to apply the new withholding income tax rate, because differently from the dividends, we do not have a rule saying that these profits or these interest calculated on these profits, they are subject, or they are always subject to 15%. In this case, the rate of the remittance would be the rate of the date when you do the payment. So if you are paying now, you have to apply the 17.5%, unless you have a double tax treaty in place. Don't know if Rafael and Leonardo agree.
Yeah, there is a different interpretation. That is, the law, when establishing the triggering event for the withholding income tax on interest on net equity, it establishes, or it says, payment or credit. And then I think there is a different interpretation in the sense that the mere declaration or approval of the INE would represent the triggering event. So if the approval takes place in 2025,
yes,
any year where the 15%, not the increased rate, is still in force, then the 15% would be applicable. But
then you have to pay with interest and fine. It's okay, I agree. But in the Q&A, it's saying that it was approved in 2026. So the credit
yeah, you're
also
right.
occurred in 2026.
Yeah, you are right. So yeah,
But if it was 2025, I agree. We could say that you are paying, it is a late payment and you have to pay only interest and maybe fines if you do not want to discuss the voluntary disclosure.
Yeah, no, you are right.
Well,
If the approval takes place in 2026, I think we will need to follow the new rules. Sorry, Paul.
No, I'm sorry. This is a very interesting topic to be discussing, and there are so many things that we still don't know, and we still having figuring out. I really appreciate the time. Unfortunately, it's already 1 o'clock. I want to thank you, everybody who joined us today. On behalf of BRATECC, I would like to extend our sincere appreciation to everyone who participated in the webinar, contributed with the discussions. We are very grateful to Mattos Filho for sponsoring presenting today, and for the continued partnership and leadership in fostering high-level dialogue between Brazil and the United States. And a special thank you to Leonardo, Thais, and Rafael for sharing the expertise and helping us to better understand this evolving landscape of Brazil tax reforms. And your insight and practical perspective are extremely valuable for the companies navigating these important changes. Also, I'd like to let everybody know that the slides will be available after this webinar. Thank you, everybody, for the participation, and I look forward to seeing you in our next events. Our next event is going to be our Brazil Summit, co-hosted with the Baker Institute at the Rice University on March 20th. It will be an in-person event held at the Baker Institute at Rice University, and I hope to see many of you there, and have a grateful day. Thank you so much, and hope you can join us for the next event. Bye-bye.